Welcome to Balancing the Ledger, where tech and finance intersect. I'm Jen Viechner.
I'm Jeff Roberts.
And I'm Robert Hackett.
And today we have a very special edition of Balancing the Ledger for you for two reasons. One is that our colleague and co-host Jeff Roberts will be moving to Colorado soon and thus won't be joining us on the show as much.
It's true. I will be a guest, though. Thank you, Jen.
And the second reason is that we recently just wrapped up our inaugural Fortune Brainstorm Finance conference out in Montauk, New York in the Hamptons. It was a great time for everyone who was there, but it was also especially newsworthy because Facebook had just announced its big cryptocurrency Libra project right the day before the conference. It just gave us even more to talk about. Bob, what did you learn about Libra at the conference?
I mean, we could not have asked for better timing. It was fantastic. But there were a number of things that came out of the conference that were really interesting. Tory Rees of Trust Token, he mentioned that, because Libra's cryptocurrency is not exactly a currency, it's backed by a basket of other currencies, and it's not going to be having a fixed price. It could potentially fluctuate in price. He said it's going to face some challenges when it comes to regulators, that, if the price goes up and down, you might have to realize gains on it or do some capital gains calculations. And that's if it doesn't get classified as a currency. So they're going to have to really figure out the legal challenges with this thing.
Yeah, we also had Katie Hahn, who's a partner at Andreessen Horowitz, and Andreessen Horowitz is one of the partners in the Libra project, and she was talking a little bit about governance and how that's going to play out.
We are one of 28 founding members, and there's a council now. Libra Association has 28 members, and we are one of the 28 members. We will have a vote equal to the other 27 members in terms of important governance decisions that are going to be made over the next few months.
Over the next few months, and
yes.
So Facebook has just one vote in that.
They have
in that
one.
28.
That's correct.
Are you going to get together in a room and have a physical meeting?
I believe we will.
Has
yes.
one happened yet?
Not yet. We have spoken with partners, but it's not in a meeting context because let me tell you why. Each of the partners had to, it wasn't clear who all of the partners were going to be until the announcement yesterday.
She's pushing this line that it's like a constitutional convention and all these companies are going to come together and build a new model for this new world currency, which on one hand is kind of amazing, but also I think it got some backlash. We had a reader who said, wait a minute, this almost sounds treasonous. A bunch of companies getting together to replace the US dollar. And I think there's something to that. It's such a bold move. But one of my takeaways from speaking to all these crypto experts was this can be a lot harder to pull off than Facebook thinks. I think it's an interesting idea. It's ambitious, it's innovative, but my goodness, 27 companies, dozens of regulators, dozens of countries. I'm not sure it's going to get off the ground.
And on the sidelines of the conference, we actually had a chance to talk with Jeremy Allaire, the CEO of Circle, Barry Silbert, the CEO of Digital Currency Group, and Adam White, who's the COO of Bakkt, and got their thoughts on Libra project. Let's take a look.
Libra is a very exciting moment when it launches. Certainly the question is to if and when it'll launch.
Libra, from what I've read in the press and skim-read the white paper, it's kind of a supranational currency that takes a basket of many other fiat currencies as well as other financial instruments and kind of creates a low volatility or quasi-stable token.
I would include the Libra project in the category of stable coins. Global digital currency tokens that are baskets are very compelling. But I think that's something that both individuals, businesses, and governments will have to ultimately get comfortable with. So it'll be interesting to see if Libra is able to launch and how that's perceived. I think ultimately we believe there will be multiple competing global currency basket tokens as well. So I think this is the beginning of new global digital currency tokens along these lines.
I do think Facebook, with having a few billion customers, is a real advantage. Now, that doesn't mean that whatever product they build is necessarily going to be successful. We've seen Facebook credits and even Facebook Pay not necessarily rocket ship off to be super successful.
Not to suggest that Libra in and of itself is going to be a successful currency, not to suggest that Facebook is going to be the main beneficiary. But what I am confident about is from an awareness perspective, an education perspective, from a technology infrastructure perspective, Facebook and Libra is going to be the catalyst that makes all of that happen at an accelerated pace.
We saw regulators immediately respond same day with calls to learn more about it and even hold a congressional hearing. What we need to see is continued interest, continued development from some of the folks that are building applications and services that I spoke to. They all said they intend to build on Libra as well. Whether the product finds product market fit, that's always an unknown, but there's a pretty good team working on it. I think David Marcus and Bertrand and others kind of know that space pretty darn well. So I'm cautiously optimistic that we're going to see Libra kind of help lead the space into the next wave of growth.
I think very few have really anticipated the concept that there could be global digital currencies that operate at scale, that billions of people can interact with, that become forms of programmable money, and that let you reinvent how financial services are rendered for everyone everywhere. And so this is a major moment where that comes into focus.
You know, there's a lot of challenger banks now who are trying to circumvent the big banks, going, you know, not having branches, going direct to consumer. Even Goldman Sachs with their Marcus has now gotten into the consumer banking side, which, you know, for 100 years, their first 100 years of their history, something like that, they weren't even in. They were just an investment bank.
And how did our Goldman executive we had on stage?
Adam Dell, who's not only
Brother of Michael Dell.
Exactly.
And his thesis was, how did he put it? Banks are screwed?
There's two types of banks, some that are screwed and some that don't know they're screwed, or something like that. Yeah, you know, I don't think the bank CEOs necessarily agreed with him.
A couple sessions ago, Adam Dell, who's now with Marcus, the Goldman Sachs unit, he said there's only two kinds of banks, those who are screwed and those who don't know that they're screwed. Which one is Citi?
Well, it's a bit of a Hobson's choice, but I think you're screwed if you're in denial. And I would say as an institution, we're absolutely not in denial. And to that soundbite that was just said, that the next chapter of banking is being rewritten as we speak. The next chapter is digitally led. The next chapter has a different set of expectations. And if we're status quo, you know what, we are dead. But we're a 200-year-old institution that's reimagined itself several times, and we are very much in that process today.
Clearly, he's trying to take advantage of innovation and push his bank forward in the new age.
But my takeaway from hearing the big banks are these guys aren't going anywhere. I mean, it's I think in crypto land, we like the narrative of all disrupted and who needs Bank of America anymore, but they're continuing to open up branches, but for new purposes. And I don't think anyone's dislodging them.
Well, Brian Moynihan, the CEO of Bank of America, so he opened the conference. And one thing that I thought was interesting that came out of that, well, not only has Bank of America laid off, or cut about 100,000 jobs since 2010 because of all the ways that technology has displaced them. But he also said that they think they have more blockchain patents than anybody else does right now.
Now, there's been a lot of talk about disrupting the payment process. We know that retail payments, for instance, are expensive. You use a credit card and the merchant gets 97% and the rest goes through a lot of intermediaries. Do you think that there's blockchain, Bitcoin adaptations that will reduce those costs? That's a big profit center, obviously, for banks. But giving that money back to retailers, on the other hand, can lead to bigger discounts, et cetera. Where's that going to go? Will the whole retail payments process get disrupted?
It's all the above. In other words, so what really goes on today, Bank of America's consumers through the end of May, actually through the first 10 days of June, for year to date, have moved $1.3 trillion in money. Checks written, cash over the ATMs, cash over the tow line, debit and credit cards, Zelle, wires, other ACH, et cetera. $1.3 trillion, so it's not a small number.
Right.
That is up 5.5% last year to show you that consumers are still spending. But importantly, 53% of that by volume today is already digitized. It's already digitally moved, and that doesn't include sticking your card in a machine. So the business has moved digitally, and it will continue to move that way. What then happens is then to the other side is sort of what's the institutional side of receiving that, which is the merchant's question or other types of payment systems. And we are driving on that hard to keep reducing that cost. And believe me, the toughest customers in the world are after you to do that. I mean, the big retailers, the big, not only food retailers or big, general purpose retailers, everybody's after you to kind of drive down the medical as a medical payments are more made by card. So we continue to reduce that. And so we have more, blockchain patents, I think, than anybody else does now. It's just figuring out where the value added actually changes something and actually enhances the capabilities. And where we've seen it add the most value potentially are cross-border activity with a lot of data and a lot of money and trying to figure that out. And then small balance payments cross-border too at the other end. And those ideas are all out there and people wrestle on the ground. But this is not, there's not like no activity going on today. It's a huge amount of what goes on every day, not only for us, but for the rest of the industry.
One more theme I'd like to hit on is, because we had a couple other very big companies here. We had Amazon and Google, and all the news was Facebook and its currency. But you know that those other big companies are looking at this closely and evaluating whether they're going to do it too. I mean, Amazon has all the ingredients to be a bank. They have the customer relationship. They love anywhere they can shave a couple points of margin. That's all. But our Patrick Gauthier of Amazon Pay was quite cagey about this. Do you guys think in 2 or 3 years Amazon will be there, Google will be there?
Well, it was interesting to me that City CEO Michael Corbett said that's a question that he gets all the time is, is Amazon coming for your business? Sounds like they are in many ways. I wouldn't put it past Amazon to take on any of these guys. And one thing, I was talking to a few of the CEOs of challenger banks like Chime, as well as Wealthfront, which is a robo-advisor, but potentially getting into more banking services as well. And, it seemed like almost like anybody can kind of get into the banking game now, which I'm sure it's a little bit harder than that. There's a lot of regulations involved and a lot of hurdles. But, think of all the different companies that we had just at the conference who are offering a high yield savings account and want, to have you invest your money with them, brokerage services and trading and savings and checking. It seems to become kind of becoming all almost commoditized in a way across the industry. And I wouldn't be surprised if Amazon could do it too.
I think it's only a matter of time before Amazon gets into this game. They're incredibly well poised. It only makes sense. They have so many sprawling arms. They go into all these different businesses. And if you look at some of the consumer sentiment, people like Amazon way more than they like their banks. This is just a greenfield opportunity for Amazon to get in.
Better than they like Facebook too.
Oh, absolutely.
Well, thank you guys so much for this special edition of Balancing the Ledger. This was fun. And Jeff, we're definitely going to miss you.
I'll be back. Don't know when, but I'll be back.
We'll be seeing you at Brainstorm Tech and at Brainstorm Finance next year.
All right, it's a deal.
Yep, be there in Montauk, and hope you'll drop in on the show every now and then.
I shall.
I'm Jen Viechner.
I'm Jeff Roberts.
And I'm Robert Hackett. For more Balancing the Ledger, come to Fortune.com.
We'll see you next time.